It's like perfect for that generation. So India is going to be a vast market for this because Indians intuitively understand store of value.
Raoul Pal is the creator of the websites globalmacroinvestor.com and realvision.com. He's an entrepreneur, a business cycle economist, an investment strategist, and an economic historian on a mission to spread financial knowledge. His financial acumen is so excellent that he was one of the few investors who correctly predicted the 2008 mortgage crisis. His true mission was unveiled in 2014, with the goal of engaging and bringing individuals into the financial journey. Raoul discusses multiplying wealth through crypto investments in this interview. This method isn't just about making money for Raoul. It's all about knowing the basics of the market, which is really admirable. Raoul talked about cryptocurrencies, the recent crash, and where he thinks the market is heading from here. He talked about altcoins like Ethereum too, and reiterated his belief in Bitcoin. If you want to hear his comments on Bitcoin and the crypto market, then watch this video all the way to the finish, and don't forget to press the like button and share your thoughts on Raoul's interview. Now, let's take a look at it.
So why gold? Gold you can't destroy. It's an element that you can't destroy. So therefore it has longevity because almost all other metals erode in some way, shape or form. And most other assets, diamonds, yes, but there wasn't enough of them. And now we can create diamonds synthetically. But gold was expensive to get out of the ground. There was kind of a known amount of it and it was hard to get. So there was a restricted supply of gold that came onto the market every year. And every piece of gold that got mined could never be destroyed. It could be lost, but really, mostly, it would just remain in circulation. So that has what's known as a stock to flow. So there's a stock of stuff that is already mined, that's available. And then there's a small amount that comes onto the market every year. And so what you know is, therefore, if you want to buy gold, and a lot of people want to buy gold, the price goes up because there's not new gold. So you have to buy it from you. So if I want to buy your gold, Spencer, you can say, well, at what price? So that's why gold became an anchor for pricing. So in a world of fiat currency, inflation can happen or debasement of currency or other things. And gold became the kind of global currency. And the whole system was pegged on gold for hundreds of years. And gold has been used for several thousand years as a system of money. So I could pay you gold and buy a car from you. It's not that complicated to do, but it's doable. But it's a pretty clunky. Bitcoin comes along and it basically does this but via technology. So you now can't increase the amount of mining because you've suddenly found a new mine in Papua New Guinea. It's a fixed number produced by mathematics that is impossible to change. So you know exactly the supply and you know exactly the stock. So now you've created something with scarcity. And because it's digital, it can never be destroyed because it's on the blockchain. The blockchain is basically a system of record. Normally, if we record something, if I sell you something, there's a ledger that says, I bought, you sold. But blockchain goes, I bought, you sold, and all of these people will confirm it. So that cannot be changed. So we don't go to court over it. It's just proven on the blockchain. So that solves gold in a way that was more useful for the current age because we've now got the internet. You know, we've all bought and sold gold and it's a pain and you don't physically own it. And if you do, where do you store it in your house? And it's clunky and it's big and it's not easy to make a payment for a coffee or a car. I mean, I can do it, but it's not easy because we have to agree on the price of gold, all of this stuff. The internet connects everybody around the world. Everybody's got a mobile phone. We need money and a store of value that operates in that system, global. And along comes Bitcoin and solves that. So, you know, I've just got off the phone to the founder of WazirX, who is the Indian crypto exchange. And like Indians are the third largest adoption of crypto now because they intuitively get it. Their population is now on average 26 years old. So these are millennials ruling India. They've grown up with gaming. They've grown up with digital stuff. So here they go. They look at their parents with their gold stash, thinking, oh, my mum's got all these gold bangles. What's the bloody use? But if I have Bitcoin, I can store it, I can transfer it, I can use it all the time. And it gets around the issue of the Indian rupee devaluing. It gets around the rising prices. It's like perfect for that generation. So India is going to be a vast market for this because Indians intuitively understand store of value. So firstly, just choose one of the big reputable exchanges, particularly one that's regulated somewhere, because that's going to give you a further comfort. So, there's stuff like Coinbase or Kraken. There's a bunch of these that are big, globalized opportunities. Binance is somewhat different because it's kind of regulated in some countries, not in others, everything else. So you choose the risk level you want. Binance is amazing because of all the products you can trade. But just simply you choose one of the really big exchanges. And then from that, once you've decided that, then you can start thinking about it. How I did it very simply, and I suggest everybody does it, is don't go diving off the end of some token that somebody randomly told you about in a bar. Go about it intelligently and say, okay, the two big exposures here are Bitcoin and Ethereum. Let me just weight my portfolio by their market cap weighting. So Bitcoin's just over $1 trillion and Ethereum's $450 million. So there's a weighting for you. This kind of market cap weighting, like you would be if you bought the S&P 500. So that's a pretty easy place to start. Then put it in your portfolio and get to understand the volatility, what it feels like to own this. Because you haven't had an asset class like this before that's so volatile. So you're going to have to learn to fight your own psyche, which is panicking when it goes down, getting euphoric when it goes up. You have to realize it's a long-term investment because we're talking about something that's going from 2 trillion to 200 trillion over 10 years that you need to not think about, much like stuff in your retirement account you don't think about, and let it grow. Now, what's going to happen is magic, and it's happened to all of us, is once we do that, we start reading the news about it. Why did it go down? Why is it going up? What's going on here? Oh, that's interesting. Oh, but what does this new token do? Oh, that's interesting because that's a bit different to this one. And before you know it, you learn by osmosis. It becomes easy. If I say to you, I think the best thing in the world is to buy Terra Luna, you're going to go, sure, and buy some. You have no idea what that is or why you're doing it. But if you start with Bitcoin and Ethereum to say, let me just use the simple frame of reference, which will be wrong over time, but Bitcoin is the store of value. It's kind of gold with a call option on the future. And Ethereum is the platform for all of the applications to develop. So if I think of those two things, I'm kind of covering the entire space for the initial thing because so much is built on Ethereum. Once you've got that, you'll open your mind. And then you're comfortable with, okay, I've got the base layer. Now, what do I want to do from there? Okay, so it depends what your financial situation is. Do you have a secure income? Number
Yes,
one.
let's say you do.
So let's say you do. You've got a good job. You've got a place. You've got a mortgage. You've got a car. Everything's fine, right? You're just in the grind. That's most people.
Yeah.
So then you've got to think, okay, what investments do I have? Do I have investments? What is my strategy for the future? Now, what you'll probably find is kind of if you're over the age of 40, you've built up some kind of investments. You've probably got some equities and you've got some bits and pieces. You might have some gold or whatever it is, right? So you look at that and think, okay, what is my future expected return? Well, most of those things kind of go up about 6% a year. So you realize that and inflation is running pretty hot. Central banks are kind of debasing by about 15% a year. You're kind of thinking, okay, fine, I'm kind of standing still, but I'm not going to make a fortune. Can you be a genius stock picker and make more money because you time the tech stocks right? Sure. But it's not easy. So then you think, okay, if I've got my portfolio in that stuff, if I were to add crypto into it, let's say 10%, then let's say Raoul's a total idiot and Spence has completely got it wrong and this goes to zero. You lose 10% of your net worth while you are still making money in the other things you've got investments in and you've still got your earnings. Frankly, you don't care. But if I'm right and it goes up 100x, you've gone from 10% to 200%. You've doubled your entire savings. So that's just from a small investment. But really it gets interesting when you're younger, and the Middle East is full of young. If you're younger, your ability to take risk should be higher. So if you start dollar cost averaging or dirham cost averaging every month, if you've got like X amount left of your salary every month, you put some of it into this every month, regardless. And what you're doing is allowing the market to do its ups and downs, and you're kind of indifferent from that because you're saying, listen, over time, this is going to grow. This stops you the insanity of it's going up, I've got to buy it. It's going down, I've got to sell it. It's like, I'm going to do this in a calculated manner and build my savings over time. That's basically what pensions do in the stock market. You make a pension payment every month, it does this. But your pension expected returns are almost nothing. You're never going to retire on your pension. That is the dirty secret that nobody wants to realize, is you're never going to retire. And that's why, your job as a wealth manager is help people navigate that fact, is they need to figure out what it is they're trying to do here. So if you're young and you start getting involved in this, you're basically getting a stake in the internet in 1997. What is it? I mean, this is game changing, because now you're being a VC investor, a technology investor, and a crypto investor, and a visionary all at the same time. So why not take that risk? Because if you're less than 30 years old, hell, this is the opportunity, because equities are all-time record valuations, bonds are all-time record valuations, credit's all-time record valuations, real estate's all-time record valuations. So your expected return from those assets is pretty low.